What's up, you guys? Alright, so today I'm pretty much just going to break down just a little bit of how I personally take some trades. We're going to start with some consolidation here. Just want to, keep it simple. If you guys have questions, pulling in the fun coupons. Derek Bait. I don't know what that means, but dope name, man, because my name's Derek as well. So, yeah, just want to keep it nice and simple. Just chill today. I'm fucking exhausted. I'm sure you guys are tired too. It's 1 a.m. where I'm at, but tomorrow's Memorial Day. That means the market's closed. That means I ain't doing jack shit, which means I can stay up late. So just want to break down some simple trades, some consolidation here. Might go into just really what I want to focus on is stop losses. You play with news issues? No, not too much, man. Not really. I'm a systematic trader for the most part, which means that I trade a very specific system, and I only trade that specific system. I'm a big proponent of writing your entire strategy down. So literally where I'm going to enter, where I'm going to exit, everything is written down. I pay pretty much no attention to news. Really, I think that's just factored in the market, so I really don't pay attention to news too much. But with that said, let's go over some basic strategies. So I think there's some good consolidation on HMY. I think there is, yeah, absolutely. I know you guys have heard me talk about this before, but just look how perfect this is showing up. Man, this is just, we're getting a beautiful triangle pattern here. But all right, so pretty much I want to touch on stop losses, because I think a lot of people, I don't want to say that a lot of people don't use stop losses, but I will say that a lot of people don't know how to use stop losses properly. And really, if you're not using them properly, why are you using them? So, okay, so obviously we have a triangle pattern, a triangle formation forming here. That's obvious. What's nice, I've talked about this before, this level is lining up perfectly to the 250. So not only do we have a top of the triangle here, but we have a 250 area as well. And not only do we have the bottom of the triangle here, but we have the bottom of the triangle lining up perfectly with the $2 level. So that's just going to make those two areas that much stronger. But okay, with that said, it doesn't matter. It doesn't matter how strong they are. It doesn't mean that you're going to win every single trade. So what's a valuable, or what is an important part of trading? Stop losses. It keeps you sane, and it keeps you not blowing up your entire account. So let's break this down. I think a lot of people use stop losses wrong. I think a lot of people use stop losses based on a percentage. So they'll say, okay, well, if I'm entering here, I'm only going to risk this much of my account, or if I'm entering here, I'm only going to risk this much of my account. And they're on the right track. That is smart. You should only risk a certain amount of your account, but in reality, it needs to be tailored on where you're putting the stop losses. So let's take this for example, because I will be taking this trade. I will most definitely be taking this trade. Unless I miss it, unless I'm a jackass and I miss this trade, I will most definitely be taking this trade at the break of the triangle. So where are my stop losses going to go? See, here's the thing. I don't know if the stock is going to break higher or if it's going to break lower. It doesn't really matter to me. I will be trading either way. So here's the thing. Not only are we getting like I said, not only are we getting a break of this triangle, but we're probably going to get 250. No, 250 is looking like it's not going to happen. But okay, so if we break higher, so let's say this stock goes in this direction. Let's say the stock goes in this direction, right? Okay. What I would recommend, and the way I would place my strategy, is I'm looking for a close above. So I want a close above the top of the triangle. I want to close above this. So if we get a close above this red line here, I'm going to enter long. Now, where are my stops going to go? I'm sure if you guys have been following me for any amount of time, you know that I don't care. I don't mind being stopped out 5 or 6 times. I could care less. I would prefer to get stopped out 5 or 6 times for a very, very small loss than extend my stop losses and get stopped out for a larger loss. So I will tell you this, and this is something I don't necessarily recommend. I don't necessarily recommend using mental stop losses, but I've been trading for 6 years, so sometimes I won't use an automated stop loss. I'll use a mental stop loss, but I'm disciplined enough to get out when I need to get out. So my mental stop loss is going, and this is the day chart, by the way. We're trading the day chart here. My mental stop loss is within the triangle. So if we break out and we close above, I'm entering long. If we then retrace, even if it's immediate, if we retrace and then enter the triangle again and close within the triangle, I'm stopping myself out, period. End of story. That is just how I'm going to trade it. I don't care. I mean, that's the thing too. If that happens, all I'm going to do is I'm going to adjust this red line accordingly. I'm just going to move this red line based on the new areas. Actually, that line's a little bit off. Should be like around there. Actually, it should probably be right around here. There we go. That's perfect. Okay. So in actuality, yeah, that's literally perfect. That is literally lining up perfectly with the 250 level. That's beautiful. That's beautiful. But anyways, so like I said, I don't mind getting stopped out, 3 or 4 times, especially seeing that this 250 level here is. I might get stopped out a couple times. That doesn't matter to me. I don't care. Like I said, I'd rather get stopped out 3 or 4 times for very, very small losses. Okay, what about on the downside? Well, on the downside, we're looking even nicer. Not only that, this stock is this is a clear downtrend. Yes, we got a little bit of upward movement here in 2016, but really this is clear downtrend. And not only that, this is HMY it's a gold company, so I bet I haven't really kept up with the gold markets, but I would imagine that the gold markets have been downtrending since maybe 2010. Let's see here. Yeah, since like 2011, they probably got a little bit of an uptrend in. They probably got a little bit of an uptrend in 2016, and that's why you're getting that uptrend on HMY too. Because you guys got to understand, these stocks that are heavily reliant on commodities, they're pretty much going to mirror commodities perfectly. And I hate this damn chart. Yeah, but yeah, that's exact. Yeah, so you see this little from January right here all the way through 2016, you get that clear little uptrend, which is showing up directly on this as well. So that's this clear little uptrend right here. And then, of course, since like 2012, if we go up farther, if we go out farther, so we're looking at like 2011, yeah, you get that same exact look. It mirrors it perfectly. So you got this downtrend, small uptrend, downtrend, small uptrend, and if you go to HMY, what do you got? Downtrend, uptrend, and then right here we're looking for some sort of break. So like I said, I don't care if it breaks to the upside or to the downside, and in reality this should be green, and then this should be red because I would be looking for a downward move. Okay, so let's say, so what about on the downside? What if we break the $2 level? Okay, which is, of course, technically this triangle should be more like this, right? Why don't I have it there? Because I believe that the $2 level is, well, I don't believe it. It's proven time and time again in my trades that on stocks under $10, the $1, $2, $3, $4, $5, etc., those all make very strong support and resistance areas. So what I did is I just moved it down 5 cents, line it up perfectly with the $2 level. My OCD is going to kill me. Line it up perfectly with the $2 level, and that's where I would be looking to take a short trade. So once again, same story, same exact story. So if this stock instead continues downward and we get a break to the downside, if we get a break of this line here to the downside, amazing system. Yeah, it just sometimes, man, Derek, sometimes it just works. It's just beautiful. When you start to, not only do you get a perfect triangle formation, but on top of that, you're getting a triangle formation that's lining up perfectly with already proven to be tough areas like the $2 area, and then on right here, you're literally lining up perfectly with the 250 area. This makes me excited. This makes me happy to trade. This makes me want to trade. And knowing my dumbass, I'll probably sleep through it or something and I'll miss this fucking trade. But hopefully I don't. That's definitely not the goal. This is of course, and really this is a day chart. So I'd have to be an idiot to miss this because on the day chart, really I'm only trading closes. So I'd have to close below here or close above here. And that means that I would have to sleep in past 1 o'clock in the afternoon. And if I'm doing that, then I have worse problems in my life. But now, as you guys know, I'm a night owl. I stay up pretty much till 3 a.m. I get a lot of my work done on the website, etc., late at night. That's just how I operate. But okay, so same thing on the downside. Same exact thing on the downside. So we break below the $2 level. We're breaking below the bottom of the triangle. What am I going to do? I'm going to enter at a close below the bottom of the triangle. And where are my stops going to go? Literally my stops, and we'll do stops in blue as a neutral color. Literally my stops will go right above. And I don't necessarily remember, these are going to be mental stop losses. So I would have to get a close above the red line in order for me to be stopped out. I'm looking for a close. Since it's a day chart, I'm looking for a close. So that's how I would trade this. That's how Derek is going to trade this. Is how I would like to trade this. And really, you just got to remember, you don't have to be right all the time. So this could completely just blow up in my face, and I could be wrong, and no big deal. Because I have a system in place. I know my accuracy. I know how often I have to be accurate. And like I say to everybody, on average, I'm accurate 48% of the time. That means I'm wrong. What is that? 60? No, 52? Yeah, 52% of the time I'm wrong. So how do I stay profitable? If technically out of 100 trades, I'm wrong more than I'm right. It's right about 50%, but it's really I'm wrong slightly more than I'm right. So how do I stay profitable? Easy. I cut my losses immediately. I don't hold on to losses. And what do I do with my winners? I let them run and run and run. If I enter short here and it continues and continues and continues, I'm probably going to be looking to this level. If we can break past the 185 level, I'm going to be probably scaling out around 150. And then once again, I will be scaling out at $1. That's worst case scenario. If this goes, well, I mean, after $1, if we get down to $1, shit. I mean, at that point, we're looking for all-time lows down here at 50 cents. Trust me, I don't advocate trading pennies, but I've been doing this for a while. But I don't advocate trading pennies, and really, I don't trade pennies. But just a few months ago, this was at like $5. This seems to be turning into a penny stock. Do you ever short the stock if it goes down? Absolutely. Yeah, that's what I'm saying. That's what I'm saying right here, man. So if this stock breaks this red line here, I'm going short. Absolutely. I don't know if that's what you're asking. If not, just clarify what you meant. But yeah, absolutely. If I make more money, I think, on the short side. I think there's more opportunity, at least currently. At least for like the last 6 months, I've been really just pounding the short side, and I've been just killing it on the short side. I've taken a couple good long trades, like SQ. I'm in SQ currently, as you can see with all these squiggly red lines on my chart. I am in SQ currently, and I got in here at the break of this consolidation. So I'm in long for like a $5 profit, which is just banging it out in like what, like a month. Made a $5 profit. That's killer right here. And what is that? That's 5 out of 17. That's like 5, 10, 15, 20. So it's like maybe 20-25% return in like a month. This was a good nailer on the upside. But usually lately I've been trading lots of downside. But once again, so let's break this down also. And why do I have all these red lines here? Well, don't ignore this red line. This is just where the price is currently. But these two red lines, really, I shouldn't have them red. Because this is consolidation. So red kind of trains your brain to think negatively, but in reality, that's consolidation right there. And I'm a little bit more of a risky trader. I should have taken the trade here. I should have taken the trade at the break of this high here, but I didn't. I took the trade down here at the break of like 1760-ish, I believe. I might have taken it at 18. I don't remember. It's been like a month. But really the smart thing to do would have been to take it right here. Can you guys see, or should I move the camera closer to the computer? Because I'm attached to a cord. I'm charging my my sexy baby, my Galaxy S8. For all you iPhone fanboys, I've been a Galaxy fanboy for life, man. But anyways, so yeah, a couple good trades, but let's break it down. So where would my shorts go here? Conservative trading is never bad. I'm more of an aggressive trader. Yeah, absolutely. I'm more of an aggressive trader as well. Just with proper risk management, in reality, if you really think about it, aggressive is a relative term. With proper risk management, I guess technically, if you're using the right size, you're using the right position size, and you're using the right risk management strategy, I guess you could technically say there's no such thing as aggressive trading. I guess you could say so. What time frame is that? I trade the day, mostly the day. Sometimes I'll day trade on the 5 minute, but usually I take the daily chart just because I'm a swing trader. But yeah, Derek, I agree. I'm more of an aggressive trader when it comes to where I enter. A good example would be, a good example of that would be Apple in the day. Now you're going to get a lot of people. This was 2015. This was an old trade. Old trade. So see where this green line is here? I leave a lot of these green lines on the chart, but most people, most educators, which I don't even if and that's one thing I want you guys to understand. If I say a name wrong of something, if you've taken a course with somebody and they say, well, no, actually that's called blah blah blah. Look, I don't give a shit. I'm a trader first and foremost. Yeah, I like to teach, I enjoy it, but I'm a trader. I don't fucking care what the proper name of things are. But anyways, I'm going off tangent. So most people are going to tell you to take a head and shoulders pattern, and really this is a beast of a head and shoulders. You got the shoulder here. You have like a quadruple top head, which is really why I entered. And then you have the second shoulder here. This is Apple, by the way. Apple, like 2015-ish, like April. Yeah, so most people are going to tell you to take the trade here. I didn't. I took the trade up here. I took the trade at the head. I always do. When it's a head and shoulders pattern, I always take the trade at the head, especially if you get like a double top formation. Let's see if we can zoom that in so you guys can see it. Let's see. I'm kind of exaggerated here so you guys can see it better. Okay, so shoulder, head, shoulder line. Most people tell you to take the trades either one of two places, either here at the break of this or even down here at the break of the shoulder line, which would be, most people are going to tell you to take the trade conservatively down here, take the short trade down there. I don't. I took the trade at the head. I took the trade, this was a long time ago, but this was I just remember it because this was a beast of a pattern. I mean, quadruple top on a head and shoulders pattern, Jesus. But I took it up here. Reason being is not only do we have a head and shoulders, but look at that. Look at that beautiful quadruple top. Like, can't get more better than that. One top, two top, three top, four tops. Come on, I'm not waiting for the break of the shoulder. I'm taking that bad boy right here, and that's where I took it. So yeah, I would say I'm more of an aggressive trader myself. Always have been. With proper risk management, it's not even that bad. It's not even that risky. Look at this beautiful gap up here too. I missed this bastard. I missed where was it? I wanted to take the trade. This was like a couple months ago. I'm sure you guys saw it on my story. I wanted to take the trade like, I think at the break of 140 on the long side. Completely missed it. That was my fault. Well, it was partially my fault, partially my broker's fault too. He screwed me. But yeah, I wanted to take this. This is beautiful. Not only that, look how perfect that level is, that 140 level. And this is what I'm talking about. Now, when it comes to larger stocks, we're not talking like $1 through $10. If we're talking like Apple, which is $150, now the whole single numbers don't have that much impact anymore, but the tens do. What do I mean by that? I mean 100, 110, 120, 130, 140, 150. Those are going to be strong support and resistance levels, and you actually see that right here. So you break above 40, then you get a retracement that literally is spot on with the 140 level, like literally spot on. So you get some support there, and then you get that explosion. I didn't even see this. I started trading other things at the time. I was entering, when was this? April? What the hell was I entering in April? Sprint, I think? Hold on. But yeah, so really, really, I actually I could have had a second opportunity here. I wanted to get in at the break of 140, missed that, got some move up to the upside, and that's why I always say pick 5 or 6, maybe 10 at the most. 20 if you're like crazy and this is all you do. I'm also in real estate, so this is not all I do. Which is nice because the way my strategy is, I've gotten it to, I've perfected it to where I really only need to trade about an hour a day just to monitor my positions and stuff. But I miss this. This would have been a nice trade here too, at the bounce of the 140 level. That's beautiful. Bounce of the 140 went higher. I could have easily seen this going short too. If this would have gone below 140, there might have been a nice little short trade here. But I missed that. Whatever. I think I was getting in at the time. I think I was getting in sprint. Yeah, Sprint was it. So okay, so here's a good example of a loser. This is a loser trade right here. I took this trade for a loss. Really, as you can see, this little thing, this means I had an alert right here. So I got short right here. Unfortunately, I do trade closes only, so I didn't get short till I think I missed it. So I got short under 8. Yeah, I got short under 8. So like right under 8. Actually, it was this day right here because I still remember this long move to the downside. So I got short under 8 on May 5th. Went down like 60 cents. No, it couldn't have been that then. Where the hell was it? Okay, then it was over here. Because I got short under 8, and I remember a long move. Yeah, long move to the downside. Short here, long move to the downside. Unfortunately, I always scale out 50% of my position on the first large move downward or upward. I was way too cocky, way overconfident. Even trading after 6 years, I still make mistakes. But I didn't. I only scaled out 25% down here, which was my mistake. And like I said, we no matter how many years you've been trading, you still make mistakes. So only scaled out 25%, not 50, and then just literally the next day just exploded back up, crushed the $8 level, and then I think I got out right when it re-entered consolidation. So I got back. I got out for like 8.20. So I made like 60 cents on the downside with 25% of my profit, but then I lost like 20 cents on the upside with 75% of my position. So I was a little bit a break even, a slight loss. And so you guys know, I usually trade. It depends. Sometimes I get super cocky, but usually I trade moderate size, anywhere from 500 shares to 1,000 shares. And then, of course, I will go above that if I get cocky. But usually I like to keep it at 1,000 shares just because the price range that I trade in, like CLF was another banger of a trade that I murdered. I murdered this trade. This was beautiful. Took it right under 10, and I'm still holding like 25% of my profit. So that's $4 in profit. So, I mean, think about it. You hold 1,000 shares, $4 in profit. That's $4,000. You take maybe 3-4 trades a month. You do the math. So yeah, I don't trade with like 10,000 shares or something like that. I will do that if, like back in 2014 with GTE, I traded some upside in oil. That's a long story. But yeah, oil really tanked 2014. I saw an opportunity. I knew that oil was way undervalued, under $30, super undervalued. So I caught some of this upside right here. So I will trade a huge position if I'm very confident in the trade, and if it's more like a macroeconomic trade. So my day-to-day trades are not macroeconomic based; they're more technical based. So let's go back to CLF. Yeah, they're more. I'll show you another trade that I just murdered. I just killed that trade, which was SID. I'm sure you guys know. That's why I say I've been really killing the short side lately. But this trade, I freaking murdered this trade as well. I took it under, once again, I'm telling you, those whole numbers, you guys. I took it under $4. And I'm sure if you guys, if you go back to lesson 3 or lesson 4 on my website, talks all about it. I'm talking about what I'm doing here. And then literally by lesson 7, we're like down here. So I'm still holding this, also 25%. That's a 50% return. 50% return in like, what, 3 months? This was a beautiful trade. Beautiful trade right here. But anyways, so we're getting off topic here. I just want to break down really stop losses. Okay, so here's a good example. So when I first entered this trade, where was my stop loss? Where would you think my stop loss is? Well, two good places that I could see for a stop loss. I'm a pretty aggressive trader, so I keep my stops really tight. So I entered under 4. My stops were right above 4. So any close above the $4 level, I'm out. Another good place that I could see, and if somebody said, yeah, I place my stops up here, I would say that's a good place too. I didn't do it, but I could totally see this being a good place as well, which would be above the relative high. Now remember, when I say relative high, not all-time high. This, the stock has definitely traded higher. Wow. Back in 2008, we're trading 26. I wonder if that's including any splits or anything like that, stock splits. But anyways, so relative high. So I could totally see this being a good place for a stop loss as well. Even at that point, with hindsight, that's a 25 cent stop loss. You're looking at like a $2 gain. But I didn't take it there. I took it right. I would put my stop losses literally right above. Literally, I'm talking like cents above the. Not really, because it's not an automated stop loss. It's a manual stop loss. So any close above the $4 level, and I would have been out. So basically, the way I trade is I would have been out anywhere above 4. I don't mind taking a small loss, and then I would have just immediately re-entered if we crossed the $4 level again. Luckily, I didn't have to. I think I took it literally on this down leg right here, right under 4. It might have been a little. It wasn't exactly 4. It was like 395, 396, right around there, and then it just crashed. So, but yeah, stop losses. There's no right answer to put to where you're going to put stop losses. I just don't like when people say, well, I'll put a stop loss for 3% of my account or for 1% of my account. Yeah, you should never risk more than 1% or 3% of your account, but that's not why your stop losses should be where they're at. They should be based on support and resistance. So a good place to put it would be here. Okay? So what you do is first you find the position where you're going to put your stop losses. So above relative highs, that's a good place. Once you find that, then you say, okay, if I'm getting in under 4, and my stop losses are placed at 427. That's like about a 30 cent. That's a 30-cent stop loss. If I want to only risk, and this is where the percentages come in. If I only want to risk 3% of my account, what position size should I trade in order to only risk 3% of my account with a 30-cent stop loss? So then what you do is you take, let's say you want to risk 3% of a $10,000 account, that'd be $300. So you take $300. 30 cent, so 30 cent loss, that means you can trade 300 divided by 30. You can take a 900 position. You can take a 900 share position. So that means that if it moves against you 30 cents, you'd be out $300 if my math is correct. So that's how that works. People do it the other way around. You can't do it the other way around. You have to do it that way. So anyways, I'm going to end the video real quick right here so I can save it, but I'll hop right back on. Hold on, you guys. What's up? Sorry, I had to just save the video. I've been having some trouble with Instagram Live because I like to archive these videos on the website so you guys can watch them later. But I've been having trouble with Instagram Live and saving the videos, so I just wanted to save that real quick. But I'm probably gonna shut this off here. I just wanted to touch on stop losses real quick, just give you kind of a general idea of what goes through my mind when I'm trading. But for all you guys out there, I would definitely check out the website. I'm actually right now on the front page of the website. There's I'll show you. You guys can get a 30-minute breakdown of. It's absolutely free. If you go to the website, Finance and Chocolate, there's a lot of free stuff on there. If I were you guys, I would definitely check this out. But right here on the front page, you can't see it because it's in white. Let's see if I can get that better. Yeah, so basically get the free 30-minute trading crash course. I would definitely go grab that. It's literally free. You just click on it. This thing pops up. It tells you right there, 30 minutes. And then what you do is you just enter 0 as the fair price. Just press 0 as the fair price. And then you just press I want this, and you guys can go grab that lesson. It's of course it's free, so it's not that in depth, but I always like giving free content. So I would definitely check that out. Literally free, 100% free. That's a good place. And really, so for all you guys who missed the beginning of the Instagram live video, what you do is you go to free content and you go to saved Instagram live videos, and they'll just be literally just archived based on date, so you guys can watch them later. So like I said, we just finished talking about support and resistance and where exactly I put my stop losses. So what I'll do is I'll upload it probably by tomorrow, and then you guys can just watch the videos. Also, if you go to free content and free trading, lessons, there's literally just a ton of videos just of me breaking down trades. So I would definitely take a look at that as well. But anyways, so yeah, so that's. I'm gonna end it here. Kind of tired. Like I said, it's already 1:30 in the morning. So all you guys, I don't know why the hell you guys are up either. Why are you guys up? What are you guys doing with your lives? Go to bed. Go to bed. Go to bed. But yeah, I'm gonna hit the bed. I'm gonna try to put some free content up probably tomorrow because I'm gonna be bored anyway. And then the Instagram live video that we literally just talked about, consolidation and support and not support and resistance, consolidation and some of my trades and kind of where I put my stop losses. If you guys missed that, it should be on the website. Hopefully by tomorrow. But all right, you guys. Other than that, like I always say, trade smart, trade your strategy. Don't bullshit around. Literally trade the strategy that you're supposed to be trading. Trade the strategy that you've actually created. Take the time to make a strategy that works. Back test it. If you don't know what back testing is, learn what back testing is. I have videos on there about back testing. Just literally, you need to have a strategy. Don't just go gung-ho, pray and spray in the market and think that you're going to make money. You have to have a strategy that's back tested. You have to know your win to loss ratios. You have to know your accuracy, your average win amount versus your average loss amount. You need to know all those things in order to build up a strategy that works and to have the confidence to trade through the losses. So definitely, I'm not one of those people that thinks that you can just look. Professional traders don't have a magic ball. We don't have a crystal ball that just tells us what's going to happen. That's why we use stop losses. Because believe it or not, we don't. People ask me all the time, what is this stock going to do next? I don't fucking know. I don't have to know. Basically, what I do is I trade a strategy, and unless that strategy triggers an entry or an exit, I don't trade it. That's just how it works. You trade based on those entry and exit signals that your strategy that you've built, that you put blood, sweat, and tears into. Unless that tells you to enter, you don't enter. So I don't know why people have a misconception when it comes to trading. No, professional traders don't know what the market is going to do. They're not magicians. They don't have a magic ball or a crystal ball that tells them what the market's going to do. They use a strategy that's back tested and proven. Try live slowly. Sorry, man. I talk fast. If you want to DM me if you have any questions and stuff. Also, on the Instagram live, like I said, it's going to be filmed and archived, so you can watch it 100 times if you want. But yeah, that's just how I talk, like it or not, that's how I talk, that's just who I am. But what was I talking about? Strategy. Yeah, you have to have a strategy that's back tested. You must have a strategy that is back tested. You just have to. If not, you're just spraying and praying, and no professional trader does that. No professional trader has a crystal ball. No professional trader can tell you what the market is going to do tomorrow. All they can do is they can stack their odds in their favor. That's it. That's what it is. That's what trading's about. But all right, you guys, I'm going to end it here. I'm tired. It's like 2 in the well, I'm exaggerating. It's like 1:30 in the morning. But anyways, all right, you guys, like I always say, trade smart. Peace.